And I think we are live. So thanks for joining us on this LinkedIn Live. This is something I don't do very often. So I'm very excited to be joined here with Carla Titus of Wealth and Worth Within. And today we're going to be talking about like private practice growth and really how to build that practice for the future. Carla, you want to kind of introduce yourself, and then I'll introduce myself, and then we'll get deeper into the sort of the topic.
For sure. Yeah, I'm Carla Titus. I'm the founder and CEO of Wealth and Worth Within. We're a fractional CFO firm who provides advisory and consulting services to growing practices. We specialize in the healthcare industry. So if you're looking for a CFO that actually knows your business model and industry, we're definitely that. And we enjoy helping clients become more profitable, really have cash in the bank, and pay themselves well for the work that they're doing. We think that it's worth it for them to have a good compensation for the risk they've taken to create this from scratch.
Absolutely. And my name is Ryan DeRusso. I'm a fee-only financial advisor, and I work with United Financial Planning Group. And my focus really is private practice therapists. I help them thrive and really embrace their private practice. And I love doing it. And the reason I wanted to team up with you on this topic, Carla, is because one thing I see often with clients, with prospects, is they have this private practice. They're looking to build it for the future, but I don't know if they're necessarily thinking about the sell down the line or sort of how to grow in a way that it could become an asset one day, as opposed to just sort of a one-man band or one-person band situation. And so that's why I'm really excited we're talking about sort of this topic here, because I know it's one that I talk a lot about, and I'm sure you do as well.
Yes, we definitely do with a lot of our clients and also people who are just interested in building a more profitable business.
Mm-hmm.
What we find often is when you first get started, you're so worried about just growing it no matter what. You're like, can people just pay me money?
Yeah.
And then over time, you start to really focus about the bottom line, about the compensation that you're taking from your business, and really help have the business produce the profits you need in order to build your own personal wealth, which is another key element of not just leaving all the profits in the business and reinvesting them all the time, but also taking some out and making sure that you have something else in the future that you can rely on for retirement or whatever your reasons are to build wealth outside of the business. And then also making the business completely a profit producing machine where a lot of people might be interested in buying it one day. Yep. And always being ready for that opportunity to show up. I think that often we think, oh, well, nobody's going to want to buy this, so we're not going to focus on profit, or we're just going to make it look negative because then we can take more tax deductions. And I think that's just like the wrong lens to think through for business owners. If you're paying taxes, you're making money, this is a good thing. And also you're setting up your practice in a way that's attractive to bigger, larger companies, or even like other firms in the area that might want to acquire yours and merge to create a much larger growth faster without, having to build it from scratch. So, and we never know when that's going to show up at our door. So we always should be prepared. And that means you're running a financially viable business long-term.
Absolutely. I talk to so many people who, when they're in the middle of it, they think they'll never want to sell, either because they don't want to manage people or because they just really enjoy what they're doing. But you don't know how you're going to feel like 5 years down the line. You don't know how you're going to feel like 10 years down the line. It could be completely different. I remember the first time I was really started to become aware of this opportunity was I had a prospect come to my door. They wanted to learn a little bit about investing. And so we had a conversation about investing. But when I was looking at stuff, I was like, what I'm really worried about for you is not so much how you're investing, but how, do you have enough by the time you're retired? And he was in his early 60s and planning to work for another 10 years. And so I ran some numbers and I was like, listen, you have 10 years. You could potentially build this into like a small sale of some sort. And that was the difference. That would have been the difference between him having a very cushy retirement and a retirement where it's very, on the edge type of thing. And he didn't become a client. He wasn't interested in it, but it really opened my eyes to sort of this possibility for, these practices that, you're building. This is like your blood, sweat, and tears. You don't want it to just go away overnight.
Exactly. And I think it's maximizing the potential for that value that could be available for you to have a good exit, even if you didn't have an exit, honestly, because, 1 in 12 business only sell anyway.
Yeah.
So
Yeah.
you might want to sell it and someone might not want to buy it. But if you have the value, then that means you're generating profits and paying yourself well every single year from
Mhm.
the practice, from the work that you're doing. So even if you're growing it with not the intention to sell, it's just a good financial lens to grow it by, because you're focused on profit and making sure that it's producing good margins overall, which then allows you to create more value for yourself or for whoever's going to buy it in the future. And that client of yours or prospect that was 60 years old might think they have 10 years. And for all they know is something happens. They get
Oh yeah.
sick, they have a disability, life gets in the way, because life happens. We all know that. And then all of a sudden they only have 2 years. And if they weren't profitable, they maybe would never have a sale or an option to sell. And
Mhm.
so by setting up your practice now, always being profitable and always having good financial results, you will always have that opportunity available for when the right price point shows up and someone wants to make you an offer, and you might just decide, you
Right.
know what, I've had enough. I'm gonna go go enjoy those profits and do something else. Or maybe you just say, no, I'm good and I want to keep the practice, and that's okay, because again, you're making money and you're profitable every year.
Yeah. Or, taking a sell and then starting to consult or something like that. Like that is very common, I see.
Exactly.
What would some advice you'd give someone if they were building for that future? Like, what are you advising them to do? Where should they focus? Any sort of thoughts there?
Yeah, I find that often the foundation of it all gets missed a lot because people are just busy running their business. We know there's a lot of demands on your time, especially as a practice owner that is growing. Just managing the day to day can get in the way. And even looking at the financials every month seems like a big amount of time invested that you don't have, even if
Hmm.
it's 5 minutes. But even starting with that, just being in tune with your numbers, looking at your P&L every month, making sure that you're assessing for the trends that you see month over month. Are my expenses growing? Are they shrinking? Are we hiring new people? Our payroll costs are going up? What is actually happening in the business? And then understanding, do we have money left over after we pay everyone and everything? Because I think that is the key. If you're not profitable today, you need a plan to become profitable in the future. And that might be 6 months out, it might be a year out, whatever time frame it is, but you need to start taking different actions and changing your cost structure or your pricing or number of clients or clinical sessions or whatever it is that the driver will be to improve the profitability of the business. And that doesn't start if you're not even aware of where you're at today.
Hmm.
And then crafting that financial plan proactively to start thinking about where you want to be in the future and working backwards from that to take the 10 action steps that you need to solve for that problem. Maybe it is a clinical capacity issue. Maybe it is a pricing. We haven't increased prices in 5 years. This is a normal one. I hear a lot because it's just a lot of work. And
Yeah.
maybe we haven't asked insurance to increase our rates. That's another one. We need to negotiate them. Or we just, haven't even increased our own pay. And thinking about like, what are the things that are important? How do we move the needle? What are the levers we can pull to increase revenue and gross margin in our business? And then start to become more profitable over time can be the goal. Maybe you're already really profitable and you just want to maintain it. And that's the thing,
Mhm.
is if we don't know where we're at, how will we know where we want to get to?
Yeah. Yeah. I would add one more thing to that is like just know the true cost of that growth, because what so often I see someone's like, we're just going to hire a W-2 employee right off the bat, never like managed anyone, never anything like that, and don't actually know the true cost of that hire. They haven't considered Social Security, Medicare. Let's say there's health benefits there, retirement benefits, that sort of stuff. So you really want to know the true cost. I was like, this is kind of gets into sort of my client relationship, but I really get to know them, and I can be a very proud, almost like papa, when I see them do something like really, really impressive. So like I'll lay this out for them, different hiring scenarios, what happens if it's a low rate, what happens if a high rate, and how that impacts the salary and all the benefits and stuff like that. And I'm showing this to a client. They're like, oh yeah, let me show you what I did. And they have this Excel sheet of every single insurance panel, what that insurance panel pays, what that employee would get from each insurance panel, and sort of the long-term returns based on sort of how many people they're seeing. And I'm like, I mean, wow, this is like that's the type of like awareness though you kind of need as you're growing.
Absolutely, because that can make a huge difference. Your average conversion rate can be very different depending on who you
Yeah.
work with and your percentage of total types of insurance to your revenue. Like we evaluate for that all the time because that can be changing. We can be proactively trying to make a change as well in that.
Mhm.
And what people are getting paid out of it. Compensation structure is a big one. I think that a lot of people are just winging it. They're really not sure. They like, well, this is how we've been doing it before, and we haven't really evaluated alternatives. And that's where financial analysis and scenario planning really come in to help you start to play with what decisions could we make that are different? What would that look like? How would we want to go about making some of those changes, maybe with our new hires versus our existing ones, and see if things can start to improve over time.
Mhm.
But we recommend that you're going to do the analysis and review the numbers before any decisions, because otherwise you're just dealing with the consequences of your decision, good or bad.
Yeah.
We sometimes
Yeah.
say, well, the client decided, and then we're just gonna help
Yeah.
them navigate going
And
forward.
then the insurance
Or we
panels
did
are
good
slow to
financial
pay, and
analysis.
you have to keep paying them. You have to keep paying those employees. So like that's definitely a big risk what you're kind of describing there.
Yeah, and there's real cost in bringing a new employee and allowing them the time to get up to speed, and
That
we
too. Yeah.
factor that in as well. It's a good, 3 months. Sometimes it could be quick. Some practices just have it down where they can like convert in 2 weeks. They can have them, fully at capacity, which is amazing. But we don't account for that normally because that's an odd scenario. But normally, 2-3 months of that, them getting their clinical load up and knowing and understanding the cost of that is really important, because you're going to need the cash flow to pay for that, because your employee will not be producing at the level you need them to right away, which is understandable. And we should plan for that scenario and
Mhm.
make sure we have the cash flow to float that and not be panicking after the fact because we didn't think about that time it takes and that cost that goes with new hires and getting them up to speed. But over time they should be more than producing way above their cost and really being at a good margin and profitable for the practice over time, and they should be happy with their compensation, and then we can all be winning in that scenario.
Yeah, and it gets you out of that therapy chair as well. So that's also a wonderful thing in that mix as well. Do you see any hesitations from clients when they're thinking about growth, like where they may almost, it could be paralysis analysis or sort of things that are like keeping them back from moving forward on growth efforts?
Yeah, sometimes it's managing people. Maybe they haven't done it before, or they find it challenging. They want, to have a team that's high performing, and they're not sure how to drive that. So we help them drive some key performance indicators and help them hold accountability for the team and start to manage in a metrics way. Obviously, they can manage in the people way as well, which
Mhm.
we do take into consideration, and very much want that HR function in mind as we're talking to people on their skill set and their performance level and what we can expect. So we can factor that in and make sure we make adjustments and allowances for that. And if people want a flexible remote job, but you're asking them to be in person full time, it just might not be the right fit. So taking that into consideration is key, because you want to make sure you're finding the right hires and managing to the right set of metrics that really make a difference. And I find that often is just challenging because clinicians, therapists, they don't necessarily love the numbers or don't want to talk about numbers. That's challenging, or like they just don't want to be held accountable. But in a business, we're trying to hit certain goals, and we need to know how we're performing to those goals, and they contribute towards those. So whatever we could do to incentivize that or help them understand the value of it, and that they're part of the team and they're going to contribute in that way, and they get behind that, and get that buy-in, is really key when managing a team and going to that next stage of growth. The other hesitation is profitability. Like, you take a dip when you're scaling, that's just expected. Like, you're
Right.
investing back in the business, you're growing it. There's more demands for, team and structure in place, leadership, maybe even, and that is not cheap. And so knowing that, being realistic on your profit assumptions and expectations going forward is going to be key too. When it was just you, maybe you had much higher profits because you kept all the money, but you also worked all the hours. So if
Exactly.
you're shifting to a model where you have other connections, then maybe it's a different cost structure and profitability, but you can scale and you don't have to be in a chair doing the work all the time in order for that to happen.
You're right. And you can take vacations and the company is going to function without you and whatnot. Because I mean, that's really the big reason that you're going to run into scaling, like a little bit of gap between the scale and the profits, because you are the highest rated therapist in your practice and you're no longer practicing therapy. You're now a manager for the most part. And so that's that's a big reason for sort of that gap, and just be aware of that. I would love to, I want to talk a little bit about sort of that management aspect of it, because some people are very hesitant to do that. Of course, if you're growing your business for a sale down the line, you need assets of some sort. So if you're not going to manage someone, you need intellectual property, you need tools that are like driving clients that live beyond you, because otherwise there's really nothing to sell. It's your practice. And if you are that type of person, that is totally fine. You need to invest in other ways then to grow your wealth outside the practice, because what you've created is an income generator in that case, but you need to like transition some of that income into wealth tools like investing for retirement, real estate, other businesses. Those are the things that you can focus on. So just wanted to throw that out there. I think the other thing I see sometimes is just sort of that fear of unknown. Like it's hard to take that first little leap into the growth. I know how I manage it. I try to show numbers. I try to have conversation with my clients, but any way you sort of like manage that kind of fear of the unknown?
Yeah, so obviously there's the financial planning aspect of it, which we can help with, and that maybe can bring some clarity and ease into what needs to be done to achieve those type of goals. But the other bigger piece of it is something we don't really talk about often, and that is the mindset, right? Being able to take the leap, trust that it's going to work out, and like trust in your ability to be able to navigate the ups and downs that come with growing a practice is also a big piece of that as well. And what we do is we, coach our clients on like expectations on the range. It could go sideways, it could be great. What is our risk? How do we mitigate? How do we make sure we have the right cash flow in place so that if things don't go according to plan, we're not stressed out about it? We can give it time to work. And then making sure that you can sleep at night is really our biggest thing with clients. Is if you can't sleep at night because you're taking this risk, maybe not the right time, maybe we want a different plan, a different timeline. Because at the end of the day, as a business owner, you need to be able to provide for yourself and your company. And what I always tell clients is like, if we decide to take a risk, and it's measured because we've done the scenario planning, we know what the plan is, and it doesn't work out, we can always go back to doing what we were doing before. And that's, I think, an overrated skill of like, what worked before, so we can just go back to it if worst case scenario happen. And what it tends to happen is worst case scenario doesn't really happen, and then they end up better off, and they're like, why didn't I do this 10 years ago? That's more what happens, because with a good financial plan and good accountability, they're able to take the steps to succeed in that new growth. But again, setting realistic expectations, because growing is hard. And like, if anyone tells you otherwise, they're lying. Growing is hard, and you're going to have to take and build a lot of systems and things in place, especially if you want, when they want to sell this thing, because nobody wants to buy a job. Nobody's going out there and say, hey, Ryan, I'm going to buy your day job, and then I'm just going to pay you a lot of money to have your day job because they can just go get a job. They're buying a fully functioning company with systems, employees, value, assets, and ideally a CEO pay that's worthy of them taking over for you in the company, especially if you're not as owner dependent in what you're building as a company.
Mm-hmm. Yeah, love that. On the flip side, do you come across organizations who grow too fast, and what's happening there?
Well, then it's a different problem. It's what I call a quality problem though. Like, I'd rather have that than the other, but still, nonetheless, it feels chaotic, out of control. It feels like things are happening to us, that we're not able to put our hands on it. And that's where really, I think the function of a CFO can really come in to help address some of that feeling that we're going too fast, too soon, we don't know what to do, because we can come in and build that financial plan, bring the clarity, really prioritize the right things that need to be addressed first, and then help them build what is the team that they need in order to be able to manage this next stage of growth, and start to make progress towards that hiring that's needed in order to support that growth in the team. And so then it becomes a race to how quickly can we get the right people in the right seat to help alleviate some of the issues that we're seeing on the lack of capacity, too much growth too fast, and also maybe the side of the processes and things that financially were not there as the foundation for the business to grow on. And a lot of what we see is they were just not even tracking, revenue month over month, year over year. They had no idea. They're like, we're just growing fast. Someone please help us. And that's where we can come in and say, this is how fast you're growing. This is what this will take in order to support it. Here's your gaps on the hiring plan that we need to go execute on this next quarter before you move forward with more growth. And, at the same time, growth is happening. So we got to manage the day-to-day and the expectations of our clients around how do we just get a grip on that. And at least we can handle the financial side for them, which then alleviates time and frees up their time to go manage the day-to-day of everything else that's happening.
Yeah, so sometimes when I see this, it's actually they're just hiring too fast. It's not necessarily that they have too much growth. Like, sure, there's the client flow, but they're hiring at a pace that's like they can't keep up with it. In fact, they're not even paying themselves, and that's like one of the worst things to be doing is if you're hiring, still not paying yourself, hoping to eventually turn a profit at some point. Because one, that business, if it goes to sell, like they're gonna pull out an idea of what your salary should be, even if you're not paying for it. So it's not like you're gonna get some sort of better like sell price down the line or anything like that. But it also indicates that you're not actually ready to grow, and you have kind of overstepped the growth of your actual business in that case, and you need to be a little careful about that. And maybe kind of take a step back and kind of see what's going on, build those processes that Carla's talking about, because then you're going to have like a better experience when you actually add in that new employee.
Yeah, in that perspective, we manage capacity just like we manage anything else in the business. And that is a capacity issue. Maybe you brought in too many people and you're not filling up their capacity fast enough with enough leads. So now we got to focus on maybe we need a marketing budget to bring in the leads that we need to fill up the capacity that you've created now because you hired too fast. Ideally, it's the opposite. We have a wait list and we have people waiting for us and we just don't have enough clinicians to serve it. That will be a much more ideal scenario because we can hire faster to meet the need that we already have in place, ready to go. And that's, the best case. Obviously, it doesn't always happen that way. Sometimes we're just hiring because we see the need and the need goes away and now we have to create it. So that's where we're assessing strategically. What are the gaps? How do we close that? And then we're also managing margin to understand once the clinician is up to capacity, are they producing enough margin for the company to be profitable and still cover their operating expenses? And lastly, is there profit left behind after all of that is said and done? After you pay the owner. And this is why I keep bringing that up, because I think a lot of you have that owner line after the fact. Like they're like, well, one day when profit shows up, and profit doesn't just magically shows up. You have to manage it. You have to create it. You have to create room for profit in your business. And in order to do that, you need to either improve your margins, or you need to reduce your costs, or you need to have a combination of increased revenue plus those in order for you to make a change on profit. Profit is, it's easy for money to just go out the door. And then we don't understand what is the benefit or ROI for some of the expenses we're paying for. So we need to reevaluate, where's the money going? Is it allocated to the right places? Do we need to make a change so that we can ensure profit happens? Because again, profit doesn't happen by accident. It's very intentional financial decisions that are going to help you become profitable. If you don't know what they are and you don't know what levers to pull, that's where we can, start assessing the 5 areas: capacity, cash flow, profit, pay, and planning, to understand what is the issue and where do we need to focus our attention to improve on that.
Yeah. And if you don't do those types of things, what's going to end up happening is there's going to be cracks in the business. So like either your employees are going to be upset, your clients are going to be upset, or you're going to be upset because you're working all the time without any money. And one of those things is going to like fracture the business, and it's going to become a situation where either it's fixed or something bad's going to happen to the business, frankly. You're going to like have debt or something like that that's going to overwhelm you in that situation. So you just want to be careful there. In terms of potential buyers, what are you seeing right now?
So a lot of big companies out there buying small practices. There's also practices that are looking to expand locations to a new state or city, and they're able to just much easily acquire another practice than they are to just build from scratch. And so if you have created something of value, if you have a presence in a location, if you already have a community that follows you as a known brand, another practice might see that as really valuable. Instead of having to start from zero, they rather pay and buy that asset and the value that comes with that new location they're trying to establish, because it takes time to build something from scratch, as we all know. So it's easier to just buy something that's already operational and producing profits and weave it into like the existing company, or leave it separate, or still just acquire it to expand. And the big companies have big money, so they're able to afford valuations that are a bit higher than maybe the normal standard 2 or 3x EBITDA, and some are not able to pay much more than that. So it just depends on who it is, that the buyer that's interested. And making sure that you have clean, good financials to present is a really important aspect of a sale, and even able to start a conversation once you have an NDA sign in place, to be able to share and tell the story of where the company is going, not just where it is today or where it has been, which I think this is a missed opportunity for a lot of people that are trying to sell, is do you have those projections? Where is the value that you could derive if someone else acquired this and pumped a bunch of cash into marketing, or some of the opportunity areas you can identify that you maybe haven't had time to develop further, but someone that has the cash flow or could inject some of that capital could accelerate the path to that and maybe double the size of practice because they're able to bring in that extra additional resources you didn't have. And highlighting the potential and the areas of opportunity is really what the buyer is looking for, because they know they could convert that into a 2x, 3x, ROI on their investment really quickly, because they're able to, leverage their size and their resources much more than maybe you could on your own.
Yeah. I always talk about sort of the demographic shifts that are happening in America. That's happening in all industries, not just therapy space. But on top of that, not only are people leaving the marketplace and a huge group coming into the marketplace, but also investments in health and mental health are really growing. It's not a coincidence that like there's so many tech companies and stuff like that now trying to enter the space. And it's because of some of these things of that demographic pull. And I'd also, want to sort of talk about a little bit of just sort of thinking about who your successor you want to be. Like there's tons of industries out there, my industry, law firms, other firms where they actually build succession planning into the business. And you could definitely do that within a therapy space. You could have your handpicked successor who could eventually overtake you as the leader through what we call an installment sale, put a certain amount of money up front and then use the business to pay you back over time. So it's not like an impossible to even look smaller when it comes to sort of these things, as opposed to like a big business who's trying to like shift into your space. So you have many different options. And I really would like challenge someone who's thinking about this to really think through what they want this company to be, who do they want that to potentially pass down to, and what do you see for the future of it? Because if you build the right way, you can actually make that happen, so to speak.
Yeah, it's like no different than seller financing with, any business acquisition. You're just doing it from the inside, and really
Yeah.
having someone who knows the practice, who've maybe grown with the practice and can continue to build the next phase of what that looks like, because they have the energy or the time or the passion, whatever it is,
Yeah.
and you want to see it through. And yeah, you can use the profits of the business to pay back the owner for that sale, because that is actually how seller financing works. Is, it gets, essentially financed from future profits, which you also have to materialize and make sure they happen. But ideally, they're there so they can pay back the owner over time. And, if that is a viable path, why not give it to an employee that is eager to, continue on the legacy you built already.
Right. And now you've passed on your intelligence, your practice, the way you treat clients, all that sort of stuff. So it's very cool. This has been fantastic. Anything else you wanted to share, or how do people reach you if they're interested?
Yeah, if you're looking to hire a fractional CFO, we are taking on new clients. You can book a call on our website at wealthworthwithin.com. Contact page, schedule a free Q&A call for us to chat about your needs and who might be able to support you. If you want to follow along our advice on LinkedIn and on our newsletter, you're able to sign up on that on our website. And if nothing else, we put a lot of free educational content. We just want everyone to get better with their finances and their business on Instagram, Facebook, and LinkedIn. So make sure to follow us and comment. Let me know what you would like to see. We would love to share more of that knowledge with everyone who's in business.
Fantastic. And then I have a free ebook if you're interested, how to turn private practice income into wealth. I'll put the link in the comments. And then, of course, follow me on LinkedIn because I am often here. Thanks again, Carla, and we'll talk to you all soon.
Thanks.